Hi, everybody. This is Phillip Guan, CPA. So, welcome to the Friday night 8 p.m. classes. So today I want to share with you in a little bit more detail of how the tax is going to do. So the number one thing I would like to share with you is when you file tax, so you have to decide it, what kind of tax form that you're going to use it. And let's say if you're single, you're going to file tax as a single. So if you marry, there are two ways to file your tax return. And the first one is marry, file jointly. And the second one is marry, file separate. You can decide it, which one you like to do it. And then the third one is head of household, which means if you either divorce or your spouse pass away for sometimes, and then you still have a young kid to be a dependent of you. So by doing this way, and you are the head of household. And then you also, there's a situation called the spouse just passed away in the last year, let's say. And then you can use called a widow. And this is actually more tax benefit than the head of household. Now, let's say if somebody is supposed to be using the widow, but by mistake using the head of household, if this in the past 3 years, you can amend it so that you can use the widow to get more tax refunds. So now, in the actual tax return, I am going to share with you how this tax return, the situation different. And after I find the symbol tax return, and I will show it to you the share screen. At this moment, I'm not sharing my screen yet. So I am going to share my screen right now as we speak. So right now, let's see. Share my screen right here. Okay. Now, here is the tax software. It's the trade tax software. In this tax software, what we do is we are in the situation of number one, this is the place that you are inputting the fine situation. For example, the very first one is single. Now, if you choose this, your situation will become single and just by yourself. And then the second one is marry, file joining. So you're going to have the husband's so-so, which is not the real one. We just make it up. And the wife is so-so, which is also not the real one. We just make up these numbers. And we call Mr. A and Miss B. Okay. And those, they above also make up numbers. And we just, for presentation purpose. So let's say this is the home address. It's 1 Main Street in San Francisco. And this is where you put the firm information. For example, it's my firm, as well as who prepared it and who did the data entry and what's the company. So by doing in this screen, and there is two more little things in here. The very inside in here, like here, can you down here? It say in the anytime in 2020 did the taxpayer receive, sell, or send, exchange, and acquire any financial interest in any virtual currency. So if you do, they will say a yes, and then you need to report that. But if you don't, and you say no in here, in this client is no. Now and then there is a client account information in these little blue boxes. So in here, look at this. Now, they're asking you if this client have any foreign asset. In this specific client is no all the way. But if there is a yes, and you need to report it in here. And also need to mention and what country it is. So now, let's go to the very simple tax return in here. And this client have a kid. And this kid is, let's say, 10 years old in the year of 2020. So it's January 1st of 2010 is a birthday. So now, in this situation, and you need to ask this question is, you would like to claim this kid as for both husband and wife, or just husband or wife? But in most situations, belong to both husband and wife. In the state of California, in our situation, and then you're going to choose this eligible for child tax credit. Why is that? Well, this kid is under 17, as you can see. So now, and then the very first question in here is this is true? And yes, it is true, yes. And the second question is this, anybody can claim this kid? No, other than their parents at this situation. So you do not need to answer those two questions. And then the next question you need to ask is like there, this question. Okay. This question like here. Did the dependent live with the taxpayer in the US more than half a year? So now in these short questions, there is a few things you need to be sure. Number one is dependent in this situation is their kids is live with the taxpayer for more than half a year. Half a year means 6 months and 1 day or more. Okay, so more than. Okay, so now, and then it must be also be live in the US. If these kids live abroad in outside US, even with the parents, they are not qualified for this question, yes. And if they do not qualify for this question, yes, they will not qualify for the child tax credit, which is $2,000. And then the next question is, if this dependent is either US citizen or national or resident of United States. It's either or. It doesn't have to be added. For example, if somebody who's a US citizen or a green card holder, though they are qualified, the resident of United States also. So now in here, this ask it say, is the CPA ask this question? Yes. And also say, do I explain? Yes. And then normally if the kid go to school, you use the school lead card. If you don't, you most likely you have a healthcare lead card, like the healthcare from the parents' company or the healthcare from Cover California. Either or is fine. And then if this is a kid over 18, you need to check this box. But in this situation, it's not over 18, so it does not need to check this box. So this box is also need to be checked. It's called dependent with taxpayer. So after we check all this, let's say we come back to here. We close this. Now let's view the tax return. In this situation, this tax return show it in a situation of, let's see what it looks like. Obvious, inside this tax return, I want to show it to you. Is in the very first page of 1040. on the left-hand side, you get a 1040 like that. Can you see it? And then there's a year in the middle, 2020. So we are in the year of 2021, but report tax is always 1 year later, right? Because 2021 had not been finished yet. So as we said, it's normally due at April 15, but this will special, okay? So now we are under the extensions. So now in here, and this is the first name, and the middle initial in here. Can you see it? No, but in this situation, this client doesn't have a middle initial. And then, now this is the address in here. Now this is the kid. I call him a smart kid. So this is do you see this little box in here? The check. What this mean? And this is qualified for child tax credit. So let's look at it. So assuming this husband and wife earn 178,000, and then have other income too. Now, all the way there's an income of 188K, and minus their dependent, their itemized deduction, standard deduction, and then 163,200 is their taxable income. So how much tax they're supposed to pay? 27,484, and that's the tax in the line 18. So now the line 19 is something good for this family. Can you see line 18 minus line 19 equal to line 22? You see that? So it's supposed to be owe 27,000. Right now, go to 25,000. So this is a minus, straight minus from the straight minus from the tax. That's called child tax credit. Okay. So now let's go back to the input. Now, let me ask a question. Any questions so far? Anybody have any question so far?
Oh.
Anyone have questions? No questions? Okay. So it's no questions, and then I'm going to continue. I'm going to continue to talk about the W2, how the W2 could input it. So in data entry in the far left corner, and then you open here, you see there's a bunch of information in here, the different tabs: general, income, adjustment, credit, to credit, tax, healthcare, other form, foreign, miscellaneous, and state. There are different tabs, as you can see, right? Can you see that? So now, you see in my tax software in here, all the blue places are the places to have input. Or have input. So in this situation, as you can see, we just did number one, right? All the information in here. Nowadays, the IRS also asks for the IDs. So it's either ID or passport, or any of the state to issue photo ID. I need their number, the state, issue day, and expire day. Both husband and wife. Okay, now let's go back to how to input the W2. As you can go down here, you go to the wages, W2. And this is the place that put in two W2. Now, T is the first person in the tax return. In this situation, is the husband. It's the Mr. A. As you can see, Mr. A. So how can identify? It's like here on the left-hand corner. There's a T belong to taxpayer, S belong to the spouse. Let me just for fun change it to S. Can you see it? all the way, change it. Do you see it? Change the wife already. Now going back to here, you click anywhere and then it comes in. So it doesn't have to be fill this part. Now, this is the W-2. The company issue a W-2. The boss is called ABC Inc. And this is the EIN number. And 7 all the way, right? And then this is not the real EIN number. And this 2 Main Street is their address. Now, assuming this person makes 130,000, okay? Now, obviously, if you make 130,000, your tax withholding most likely is not going to be 4,000 something. It most likely will be more than like about, let's say, 20K. Okay. So now in here, now this withholding, you can withhold more and you can withhold less. But when you withhold more, you most likely you're going to get the refund when you file a tax return. But you withhold less, you may end up to pay tax. So this is where determine this number. But the less of those numbers, there's no way you can change it because Uncle Sam is going to get you, right? So now this withholding, now box number 2, as in the yellow, in here, as well as box number 17 is the state withholding. Let's say we're assuming this is 5,000 in this situation. Now, we also, in this situation, have a spouse, which is the wife, number 2 in here. Have a company called SYE Inc. and the EIN is 3 all the way. So obviously not the real one too. So this is the address. And assuming this is the wife's income, 48,000. Now let's say just 10% to be easy to say. So just, okay. So then in this situation, see whether or not they have enough money to pay for their taxes, right? So now, go back to the situation where we just talked. Now, this client supposed to pay 27,484, but because has a kid, they have 2,000 credit, child tax credit minus from 27,000. That's why they have only 25,484 need to pay. Well, in this situation, their withholding is only, as you can see in here, this is W-2, and this is another W-2. The withholding together is only this much. So, what are they going to do? By the time when they file tax return, they end up need to pay. They ends up do not need to pay tax. It's not because they pay enough tax. It's because they have not received that 1,000 in here. Now, in the year of 2020, IRS pay 1,200 to the adult, and then the 500 to the kids under 17 years old, and if your income is also qualified. And then let's say if this client the year before is making a lot more money, that's why they are not qualified to get the first round, and then the second one they do get it because the income job, and then they qualify because the first one was based on the 2018 income. So now in this situation, they get They only get this. So that's why they get a credit. Okay, that's why they get a credit. Because of this credit, they ends up a little bit refund. You see that? It ends up a little bit refund. 316,000. 316. Now, let's go to another situation. Let's go to another situation if this person also very lucky and buy a stock and also in the same year, and then January 1st of 2020, and then at the last day, December 31st, 2020, it sold it. It was bought at 5,000 and sold at 15,000. Well, in this situation, that means he's lucky he make 10,000. So in this is a short-term capital gain. This short-term capital gain need to pay tax on that. Okay. So now this 10,000 is already report in Schedule D. Also report in 1040 line 7. Right here. Can you see it? So in this situation, the total income, not only the W2 income, but also have the stock gain. And this is already including here. Now let's assume, and this client have participate in their boss's 401k. And they decided to put some money in the 401k. The 401k is in here. And you see, D like David. This is the 401k. Now, assuming, and this client put, let's say 20,000 in 401k. Let's say put 15,000 in for the husband, and then put 5,000 for the wife. Okay. So now, just 10,000 is easier to do the math in here. Let's say 10,000 in here, because this 10,000 contribute to 401k. So what the W2 is going to look like? What's this? Box number 1, no longer 130. It's 120k. But and then this is 130k. And this is going to be looks like this. The taxable income is 120k. But he's really making 130k. But the 10k is tax deferred in the 401k. That means, so he's not going to pay tax in the year 2020 tax return. He will pay tax by the time he distribute the money from this 401k, include principal and tax and again. Okay, now let's also assume the wife is also participate 10,000. So now in this situation, so in this situation, the wife is also paid participate in 10,000 of the 401k. So we're going to put the 10,000 401k in here. So her 401k is going to look like this, 30, but here still 40, like that. So now, as a result, their income decreasing by 20,000. Can you see that? It was $178. Right now it's $158. And look at the tax. It was only like 360 something refund. Oh my God! Right now it's 5,700. You see it? So that tax, it was. So it's more than 5,000 tax on. So get deferred on the tax for the future year. So they don't need to pay this extra 5,000 plus in here. When I say 5,000, it's 5,716 minus the original. I think it was 361, right? 351 or 361, something like that, 300 something. So now that's what they call the 401k could get the tax deferral. So now let's look at this situation. Now, if this client still want to participate in the 401k, besides the 401k, want to put it in the IRA, see whether or not they can qualify. Okay, under adjustment. And then IRA in the 19. And then you put it in that form 6505. Now, the first one is the spouse, is the taxpayer. Let's say if this person would like to put 6,000 into it. Now, if he doesn't want to put it in a non-deductible, but let us see the program say whether or not he's qualified or not. Now let's put it in. This is what he intends to do, but whether or not the law will allow him to do. Now let's look at it. Now, this W-2 is the same. Now, if that would be taken, and they will be in here, they will be in here, the IRA contribution in the line 19. But do you see the line 19 was blank? What that means is it's not deductible. So why is not deductible? Why this one is not deductible? Because they already have that 401k. So in this situation, they are not qualified to do this 401k N plus IRA. As you can see in here, their income is more than 100. See, in this situation, they are not deductible. So what is the planning way for them to better to do it? Well, as you can see, both husband is not max fund their 401k. They should go to the HR to get more, for example, in here. Now let's say it's 6,000 in here. Let's say it's 16,000 in here. This means like this, right? So now this is 130k. So now let's look at this situation. If this client participate, the 401k is 16,000. So his W-2 will be looks like this. In this situation, let's look at the tax. It was 5,000 something, right? You see it? Now all the way is 7,000 something, just for furlough. So it matters. It matters. So that's why, especially you participate in your 401k, And a lot of time, when you try to buy IRA, you may not qualify. Well, you may not, for sure, you're not qualified, but in a lot of situations, you're not qualified. So you're better off to get more money contribute in your 401k, because that is something you can control. Okay, so now I'm ready for anyone to ask questions if you have questions. And then
how about the Roth IRA?
the Roth IRA is not going to be shown in the income tax return in the income portion of it. The Roth IRA is not going to be in here.
But if they do the Roth IRA, they will be fill out the AAA0 form. They will be get
Yes.
a few hundred credit, right?
They do. So,
but it's so in the 1040.
Yes, and here's like this. In the situation A0 form, and then let's say state of California. Let's say you put in Roth IRA, right? You see it? It's traditional or Roth, right? Let's say how much? 6,000. Let's say, right? And then let's say the wife is also 6,000. This situation, they may get some credit, and the tax law is very interesting. Let me see. So if they put in, because they have been put in this already, you see it? But that's their total. In this situation, whether or not we have credit, now look at here. In this client, the credit doesn't show. It's not because they're not the reason is not qualified is because the income is high. Now let's say, let me just change their income a little bit lower. Okay, let's say a little bit lower. Let's say 78. Let's say this is like 9. Like this, like 19, like this. Okay, see whether or not they qualify. When you have an income more, a lot of times they're not qualified. Line 11. So now, in here, see, when you have, as you can see, when you over the income of 65,000, you won't get that. Do you see it? Like here. If your income is over 65,000, you won't get this credit. Okay, so this is something. Okay, when you have income more than that, you won't get it. So that's why you won't get it in this situation. Okay, all right, that's good.
Okay, and can I ask question?
Yeah,
and
sure.
if the Roth IRA in 2020, if the single is 98K is qualified, put the Roth IRA. If the married is 135K, but the credit is different. The income limit, right?
It could. Well, let's look at it. In most situations, you won't qualify. Let's say you say this person, let's say we're assuming head of household, right? Are you talking about head of household?
It's not. I'm talking about for the Roth Iowa.
I know,
And
but
if the,
let's say, is it this client is a single, married, or head of household? The difference, because the income will be different. You have to be choose, is it married, is it single, is your head of household? You have to choose the right one, in order to answer your question.
Let's say single.
Let's say single. How much this person make? Let's say. Now we only talk about this person, right? Let's say we put the number in here. Just put the,
how about under 65K?
let's say 48K, right?
Yes.
Okay.
And then, did they participate in 401K? Yes or no?
I want to see if the Roth Iowa.
I know,
If the Roth,
but my
if-
first question is, do they participate in 401K first? Let's say no. Okay, let's say no. But in this situation, and then do you remember I put the Roth IRA institute? I put that 6,000 in already. Let's see. Right, I put a 6,000 in here. Now, is the head of household, the income is just 48,000. Can you see that right there? It's like here. In this situation, the income is more than that because I have others. So let me have to change the scenario a little bit. Well, even I put a single in here because the W2, the computer not smart enough to get rid of this all incomes. So I have to get rid of these incomes. And then also I have to get rid of another income because I assuming there are more incomes in here. I assuming there's like some stock transaction. Do you remember that? Sold stock and make 10,000. By doing so, they are more than 48,000. And also, I also assuming there's a rental income. Now, this is simple situation. This is just like a single tax return, and just only this person at 48,000. Straight up, have a kid. Okay. So now, obviously, and then the dependent is not gonna, but the withholding not gonna be like this number. And then we're gonna see. Oh, let me get rid of that. The computer is gonna confuse this in this number. So now, in this situation, we also have to be answer no in your distribution. Okay, now. This situation, the income is 48,000. And two times 48,000. But this is single. Single is only 32,500. You see it? Single is only 32,500. But if I change, this one is head of household. In fact, this is with a kid. If I had a household, yes. If single, no. Now I'm changing this to head of household. So now it's head of household. Now it's 48,000. Can you see the standard deduction is more? Now you can see we got 200 bucks in here because as you go to head of household, you go in the middle. It go to 48,750. We just barely below that. Now, if you make just a little bit more, just to be fun, you just make 800 bucks more. Okay. In this situation, he's not gonna get it because this is 48,800, but the limit is 48,750. You see it? In the middle, right here.
Yes.
And we just over the limit.
How about he put 1,000 for the traditional IWA and he still get the 200 credit?
No, he won't get a 200. Well, as he get the 2,000 in the IWA.
The traditional IWA?
Yes, he will. Because in this situation, what you do is you're smart enough. Let's say you say 1,000. Now, because by doing this way, you are pulling down the income by 1,000. Because this 1,000, so your income becomes
under
48. Yeah. And then,
yeah.
and then now in this situation,
Still get 200, right?
Yeah.
Yes. Yeah.
You
Yeah.
get it.
Yeah.
So
Thank you.
Yeah, the situations all you need to do is in your under depends on what kind of the tax filing, and then you have to be no more than the maximum. Like marriage only, you cannot more than 65,000. At the household, you cannot more than 48,750. As single, you cannot more than 39,000. Yeah. No, 31,875. Yeah.
That is 0.5, 0.2, 0.1 is the percentage, right?
Yeah, the percentage of it.
Okay, means the income is lower, the percentage is higher.
Yeah.
Yeah, we can see.
Got it.
Yeah, that's good. Very good.
Thank you.
Okay, so now.
Thank you.
Okay, very good. So we are. Let's recap what we say today. Okay, first, when you file tax return, on the very top, it's called filing status. It's either single, married, file jointly, married, file separate, head of household, or qualified widows. So it's one or the other, one way or the other. You cannot do two things. So now, in here, the most important thing when you do things, you make sure the social is correct, the name is correct, and a lot of times, when you do a Chinese spelling, and their first name may be two words, two separate, and then you have to be asked the client, make sure is if those two things are part of the first name, or one is the middle name, and that's important. If both, all of them, let's say, if this gray man to get a separate like this, okay, then you see the first name is like this. Now, there are some Chinese first name spelling like next to each other. So which way is right? No, well, whatever shows in the social card is the right way. But now, if you go become a U.S. citizen, the citizen card, or the birth certificate if you are born in U.S. Okay, so most likely you go with the same as your social security card, and that's how it works. Okay, so now in here, when you have kids, it matters if they are 17 or under or over 17, because under 17, if your income doesn't over the limit, you get a 2,000 child tax credit. But if your kids is 17 and over, in the year 17, turn 17 and over, you only get $500. Okay, so I don't know why the tax law use 17, not 18. Okay, so in the W-2 input, you follow the box number, like 1, 2, 3, 4, so far, so on. Now, the interesting part of the W-2 format is not the same, always the same, but the number is always say the same thing. So you say box number 1 is box number 1, box number 2 is box number 2, but may not be the same precision like that. So you want to make sure put in the right places. And if the client have 401k, which is going to be in the box 12, and you have to be careful. And the box number 1 and box number 3 and 5 may be different. And you have to be override these two numbers to match what is going to form. Okay. I still have a few questions if you would like to ask questions regarding about today. Any more questions? No more question? Great. So today, I would like to say thank you for all of you participate in today's classes, and have a nice weekend. And next week we're going to continue. All right. Thank you. Bye bye.
Thank you.
Thank you.
Thank you.
Have a good night.
Good night.
Good night. Thank
Good
you for your
night.
time.
Bye-bye.
Thank you for your time.
Thank you. Bye.